It's much easier to kind of challenge and break down something than to build up some new order.
How would you define the new order?
I think we see a lot more disorder than order right now.
The U.S. has lowered its interest rate.
So much of the world trade and investment depends on the US dollar. One of the interesting factors that we've seen is actually because Chinese interest rates are lower, you're starting to see more demand to borrow in renminbi actually. Now, of course, those renminbi financial markets are not nearly as large in terms of global reach as the US, but that's something to watch.
Martin Jorzempa is a senior fellow at Peterson Institute for International Economics, who's now in Shanghai with more than 100 global policymakers, business leaders, and scholars from more than 20 countries and regions to share insights during the annual Bund Summit.
The main way to categorize it would be just much more unilateralism and also plurilateralism, where there are groups of countries who agree to move forward with things. And I think the thing to watch will be, will countries who are, say, struggling with potential spillovers of Chinese industrial policy and US tariffs manage to work amongst each other without US leadership to reduce trade barriers with each other, to reduce investment barriers with each other, and actually coordinate well.
The aggressive U.S. tariff moves since April have aroused concerns over inflation, which was voiced at the Bund Summit.
There is still a lot of uncertainty in the U.S. about inflation.
The economy and the inflation rate due to the tariff by.
Just last month, the U.S. Federal Reserve cut its benchmark by a 1/4 percentage point. And now the question has become whether the rise in inflation triggered by the U.S. tariffs will force the Fed to change the pace of rate cuts.
In the U.S., we don't really know what the outlook for monetary policy will be, in part because we could see a significant inflationary impact of the tariffs. It has showed up, but maybe not as much as feared, in part because there were a lot of imports before to kind of get ahead of the tariffs. And there's been general weakness in the US economy outside of the AI space, and there are lots of exemptions to the tariffs which allow a lot of the most important goods, for example in AI, to be imported without a tariff. But I don't necessarily expect that to last, and then it will be challenging to potentially continue to lower rates if inflation is picking up.
The Federal Reserve is projecting only one rate cut in 2026 according to its median projection, which is a more conservative outlook than expected.